I would say with the juggling act, you try to only drop one ball a day. That was the reality. There were moments where I was torn away and there was unavoidable things that I could not get away from. Mm-hmm. There were things that I had responsibilities for, and whether that be for a kid, whether that be for family, whether that be for the real estate, mm-hmm. whether that be for the job. Mm-hmm. And there were just those moments where I have to go. Mm-hmm. I have to be here. There's nothing else.
Yo, what is up, everybody? Welcome to the Go Big Live Real Estate Investors Podcast. I'm your host, Matt Drouin, the show to listen to and to watch if you are a residential real estate investor who owns maybe a couple duplexes, that's sick of banging their head against the wall and are mystified at what it takes to scale. I have a very special guest today that I'm psyched out of my mind to bring on, one of my fellow rock townies. We don't have as many townies in the show. I actually got question is like, why don't you have more local people on? I was like, listen, I wanted to front load the show with a lot of like national people to help like build some afterburn and get my people some love. So I have Mr. Dave Schreiber on, former fraternity brother of mine. We're still based out of the Rochester, New York market. And I've just been absolutely amazed to see Dave's growth over the years, where he came from when I first met him, when we first started talking about real estate and real estate investing. And welcome to the show, man. I appreciate it.
Thanks for having me. I appreciate it. It's been quite the journey from some of those conversations with a soda or two at the in-between tavern at college, talking mm-hmm. about how you had started your real estate journey. And
RIP.
Yes. No longer. It's a shame. But thanks for having me.
Yeah, absolutely. So just to build some context here, you and I started talking about real estate pretty much when we started the coffee club. You're, one of the founding members of the coffee club, and it's kind of evolved into this whole different thing here. And it was like the one part of the week that you looked forward to going to, as you told me when you started going here. And you used to be the self-described dumb guy at the table, asking all the stupid questions. And fast forward, a couple years after that, you became the guy answering the dumb questions. So just tell me about that in terms of like how that enabled you to kind of like level up.
Yep, I was at the first meeting. I actually showed up the week before the meeting started because I got a little confused at Spot Coffee. Mm-hmm. I was green. I had bought my first rental, had felt like I was being successful, found another home I fell in love with, bought that, mm-hmm. actually moved into that, kind of one of the landlords that lived in half and had the other half pay the mortgage. Mm-hmm. And I bought my third one, and that's when problems started to rise. Self-managing is a challenge, as I'm sure you're aware. Mm-hmm. I was also young and felt like I could fix the world's problems, and probably overstepped and got far too involved trying to help tenants work through things that maybe weren't my responsibility, and that line wasn't clear for me. So I found myself in all these unique situations, mm-hmm. from bad breakups to
some lovers' quarrels.
Yes. Pepper spray involved. Somebody stabbed me with a fork. All very plausible real world things that have happened to me. And I would come to these meetings, and we'd get to the end of the coffee club, and you would ask, okay, any questions? And I'd be in this middle of this situation, and everybody would look at me like I had two heads. And, eventually the bells start going off in your head where no one else is going through this. Why am I? What am I? Where's the self-reflection? What am I doing wrong that's putting me in these situations? So mm-hmm. started to learn boundaries, explain the people's options, and kind of go from there. So that was one of the first lessons, watching some of the people that had come before me that were a little further down the road. Mm-hmm. That was a step I needed to take, and it was inspiring. So you show up there, and I know you had a large residential portfolio at that point, and there were a couple other guys that were doing a lot of flipping and larger commercial deals in different sectors. And what I felt like going to those meetings is that I had the support to continue to grow. Mm-hmm. And I had a wealth of knowledge that, freely exchanged amongst everybody that was there. And I certainly didn't start out by contributing, but through experience, I was able to correct other people and not correct them, but tell them, look, this isn't a path you want to go down. You want to stay about as neutral as possible and kind of go from there. Once I started doing that, it certainly became easier to manage. As a smaller landlord, when I started, everybody had my cell phone number. Everybody knew my face. I was the guy that was showing up at 2 a.m. to plunge a toilet or flip a breaker, whatever the case may be. And eventually you get to a point where that's no longer an option. So you got too much.
Yeah, don't work no more. Well, let's fast forward a little bit because I want people to understand where you're at today. Describe your portfolio right now in terms of whether it's units or value of the portfolio you've built. Tell me a little bit about that.
So I have built up, it's about 70 residential units. I do have 2 commercial spaces. I've kind of started leaning that way as a natural kind of progression. Everything located within the greater Park Avenue area. I found that if I keep my footprint small, I can maintain and do a better job maintaining with a smaller footprint. There's no time loss for travel or anything else like that. I have a small warehouse in Park Avenue that we stock supplies. So if an outlet goes bad or I need paint or anything else like that, it's readily available. Commercial has started to certainly become more interesting in this high interest rate environment. The way it was described to me by another investor is it's third grade math. It has to make sense. And if it doesn't make sense, the deal doesn't work. Where residential stuff, while still my passion, I love residential. It can be emotion. Like you just saw, like I love it. So the only way I can afford to be in residential is to buy the worst house on the street. And even that's becoming challenging with the way our market has been. So leaning into commercial a little bit. I first bought the shop on Park Avenue that I have since opened up the wood-fired pizza joint in. Shout out to Ardor Park if anybody hasn't tried it.
Oh, it's awesome.
And then I just recently acquired the old Brickwood Grill. So we've been going through that, repairing sins of others from the past and 40 years of bar owners using bar patrons to work for a free bar tab. And it's been a 6-month adventure. So.
Wow. Yeah. I wonder if they've placed any liens on the property for not getting enough drinks in exchange. So, so you got about, so you went from one property to about 70 units plus some commercial stuff that you've added to your portfolio. Really impressive growth. Over how many years did you do this?
It's been about 12 years.
About 12 years. Okay. Yeah. All right. So, Dave is a former hammerhead, just like I was. So maybe he'll get it and he's like, hey man, just buy some bigger stuff and he won't run into this scale dilemma. But before we get into how you built that portfolio specifically and the challenges you faced and maybe what you would have done differently, let's go in your background. So you were born, now you're here. What happened in between?
So born, grew up in Irondequoit, graduated from Eastridge, moved on to Geneseo immediately after. Got out of Geneseo, started a job at Paychex. Throughout the course of my life, I'd grown up on farms, working on farms, moving cattle, running equipment, everything associated with it, and I'd fallen in love with it. So when I started working my W-2 job straight out of college, the path that everybody tells you to take, I wasn't happy, and I knew that. And I knew that I wanted to be a farmer at the time. Tried that, well, didn't work. Tried it again, that was it. Just didn't work.
Yeah.
So I had a cousin in Kansas doing real estate, and him and I would chat pretty much daily. And he said, dude, you'd be good at it. Just try it. Just try it. So at 23, said, what do I got to lose? Bought my first rental property. I probably did it backwards in hindsight. I would have owner occupied the first one It was very challenging to get a mortgage on a property when I had no prior experience. I actually had to have my dad co-sign with me, which was a feat in and of itself to convince him of. But I did it, made it work, and I ended up moving into that property after 7 months and kind of outgrew it. Wanted something a little bigger, wanted something a little nicer, and found another property and kind of scaled from there. Career-wise, I've always kept a W-2 job and just kind of managed to negotiate time away from home and kind of away from friends and family and whatever else it kind of took to make it work. And it can be a challenge. You're on call 24/7. I tell people my working hours are between 5 a.m. and 2 a.m. depending on the tenant. So that was a real hurdle. You never knew which way it was going to go. You never knew what. I tried setting different ringtones for tenants as opposed to like my friends and everything. So I kind of knew what I was getting to if the phone went off in the middle of the night. But so continued to grow. Had the W-2 job. Would work after work, would work on the weekends, would work early in the morning, would take time off of work to continue to leverage my skills and trade skills specifically on the rentals. And that was a big thing. As we meandered through the real estate, I got into mold remediation. That certainly helped. And that was a skill that was highly demanded by real estate brokers as you go through the home inspection process. Most banks would require that the mold be remediated. So got really used to crawling around in 110-degree attics and sweltering heat and doing 20 minutes up, 30 minutes down. And that was a good time. I still dabble from time to time, but just did the onesie twosie things. And I think where it really took off was, to circle back to it, the coffee club and kind of making my mark as somebody who was looking for something super specific. I knew that self-managing and maintaining, going too far away from where I lived in Park Ave was going to be impossible. It was going to be prohibitively time intensive. So that's all I was looking for. I wanted Park Ave stuff. And if something came up in Park Ave, if somebody had a lead on something in Park Ave, I was the guy to go to. I would, with the W-2 job, I was willing to operate on razor thin margins as long as I could cover my costs, because I knew that the equity build over time would win. In hindsight now, I can say that I kind of won on appreciation. And it allowed me to kind of continue to work my job and do everything I was doing because I was 2 minutes away. At worst case scenario, I never really did too much, went too far, traveled much. I was just kind of a local boy. I mean, the furthest I would go to my parents is in Irondequoit. So
yeah,
that was it. And eventually you get to a point where that's not an option anymore. So I had a good friend that needed work and he was handy. So I said, do you want to come work for me? So he started filling in. It was probably about 3 years ago, and that made my life infinitely better. And it was the first step in kind of recognizing the things that you had been telling me all along, where you got to fire yourself, Dave. You gotta get out. So did that. Brought on a second guy, probably about a year later, because the numbers justified supporting it, and he did a lot more administrative stuff, bookkeeping, leasing, the Buildium reconciliations, because somewhere in between that journey, I decided Venmo or dropping off a check to me wasn't working anymore. Venmo was capping my transactions at $5,000 a week, and I had a rent roll of $60,000 at the time. So Buildium allowed to just process all those payments and manage some of the work orders coming in, digital lease signing, and it was really that was an amazing step. And now I'm here. That you look back and you don't sometimes remember the journey. You don't remember everything you did until you're staring at it in the face. The most recent of which, again, is the pizza shop. That was an undertaking. It had been on the market, come off the market. They couldn't get an offer they wanted. They were getting much less. I came in and was able to negotiate a deal. The 2 commercial storefronts were vacant. I went in, secured a tenant that I believed in, that I thought was an amazing fit for the area, because what goes better with 2 bars on either side than a pizza joint?
Yeah.
Went a little different with the pizza. The owner is a fantastic chef and wanted to do something wood-fired, and I thought that was unique and boutique enough to fit what I envision and believe Park Ave to be. So went in, started demoing, got red tagged by the city, and went through all those hurdles to get through. That was about 7 months of back and forth. We checked all the boxes. We had to go before the City Planning Commission. We had to go before the Preservation Board, and the sign-up times for both of those don't always line up well with one another. Architectural drawings were required. They wouldn't take a floor plan. So pull your permits. That certainly hurt, but we managed to get through it. And I was way over budget, way over my timeline, but I'm happy it's done, and I'm happy to have it.
Well, it's an absolute gem for the neighborhood. Yeah, we actually live like 2 blocks away from this place, and I've always been like, because before there was a vacant storefront that I always like went through businesses, churned through them, and then there was like some, creepy psychic shop that was there that they did tarot card readings and all this other stuff there. So it's awesome to have like a place where you can walk to with your family and that sort of thing. So, and also kind of like where you and I are like kindred spirits with, you can definitely do well and do good at the same time in this business. That's the reason why I love mixed use buildings, is because you can like create some really great living spaces, but also help like program a vibe for a neighborhood and change its complexion from a retail programming standpoint that others, may just take the highest and best. You could have had a C-store, convenience store that was sold poison in the neighborhood, probably would have gotten that space there, and it would have been zoned as of right. But a pizza shop, though, you got to hire an architect. Drop $10,000 for an architect to just do all this stuff. So let's talk about your scale journey, because were you using the burr method this entire time up until this point where you are right now, with buying properties, refinancing, pulling cash out, and then growing the portfolio that way? What was your methodology from a financing standpoint to grow it?
So when I first started, and up until very recently, the interest rate environment's been very static. Slight variations, but very, very much right in that 4.5% to 5% range. It was just like that. So I would buy a property, I would invest into it, and when I identified my next property that I knew I could put some value add into, I would take one of the properties that I had and I would roll it into that one under a commercial loan. That way I had very little cash out of my pocket. I was using equity. I wasn't pulling extra cash because I wanted to keep my cash flow free to do renovations and upgrade on the ones that I was buying. So I had done that for years and years and years, probably the first 10 years. I bought my first one, then I did that a traditional Fannie Freddie product. I bought my second one the same way. I bought my third one the same way. When I bought my fourth one, I rolled the first one into it. Bought the fourth one. The fifth one, I took a construction loan. That was a full rehab project. And then once I got done with that, it was worth way more than they originally budgeted, because they can't tell what kind of finishes you're going to put in or anything. But then I leveraged the one I'd already leveraged, because values had increased, and I had pushed the value through rent increases, updates, and I actually bought a big grouping of properties. And from there, I went through those, and that one was the first real giant step. That was I basically doubled my portfolio size in one foul swoop. So I had the opportunity to buy 4 properties in Park Ave on streets I didn't already own, which was alluring to me. severely undervalued. They were under rented. There was 5 vacancies in the 16 units. They were in rough shape. Some of the work had been done, most of it hadn't, and it was going to require a lot of effort. And I took a shot. So I got to that point, and then you continue to leverage. You just leverage up. Never pulled money out. Just never bothered. I would rather keep my monthly payment lower than pull the cash out because I felt like I didn't need it. I've always had the W-2. The W-2 supports my life. And that is kind of the direction I took. And I knew that was always effectively a piggy bank sitting there if I ever need it. So I steered away from that. Recently, I still don't necessarily take cash out. I have taken some renovation loans. I bought the building that the pizza shop was in. So I bought it. I took out extra money based on the construction cost. I should have asked for more. Went way over budget.
Yeah.
I think I got like 70,000, and I think all said and done, I was about 130 into that building, which not the greatest return on investment for a 1,300 square foot space, but it was a great learning experience. It's my first time I've ever owned commercial. First time leasing it, first time going through that process, seeing how leases were structured with an attorney, and sourcing the right tenant that I felt was good for the neighborhood, and also recognizing that this was a building that had been owned for a long time by the same owner who had cut every corner that you could, anywhere from the boiler system, the plumbing, the structure itself, hidden things in walls, and it was an adventure.
Yeah, absolutely.
So, no, that's kind of been the journey as far as financing goes. Recently, it's been more about finding a deal that works and then making sure that it cash flows appropriately. I hit my debt service coverage, and I've been starting to chase down flips. I have the skill sets. I have the teams. I can do those at any hour of the day. It's not a big deal. And leveraging my skills to get more cash, because I'm not going to trade in my $2 million in mortgages at 4.5% for what are they now? 7.5, 7.25, somewhere in there. That's a big swing. So I'm my whole business model has changed where now I have to find the cash. I can't just roll in equity because it's not worth making that money more expensive when I'm at a fixed interest rate. So
yeah,
that's kind of the up and down journey of that. It was leverage my forced appreciation, and now it's find the cash.
So you're finding the cash ideally through flips and that sort of thing you do, right?
Yep. I have gone the hard money route. Take the hard money, like you said, a burr. But that's challenging because typically I try and do a quick turnaround time. By the time I'm going to purchase a building, I know what I'm going to do with it. I have a tenant in mind. I have something lined up. I have it all lined up, and that's tough from a hard money perspective because I only typically need it for 2 to 3 months.
Yeah.
Between build out, closing on a new mortgage, it's somewhere around that 90-day mark. Some things go a little longer, some don't, but it's tough to find people that don't have a 6-month minimum. It's tough to pay the points. It's tough to pay the interest rate. 12 to 14% hurts the bottom line. Have done it, but try to steer away from it. I would love to self-fund my own deals and kind of just have that revolving cash that allows me to buy something, reimagine it, make it what I want it to be, and then pull my money out and move on to the next project.
Yeah, no, absolutely. I mean, it's just like proof that there's many ways to skin a cat. And I tell my clients this all the time, like when I'm doing a review of their portfolio and they're at like 4.5% interest and they have a ton of equity, and a lot of people talk about this, is like the longer you own a property, the return on equity goes down. And a return on equity is basically how much cash your equity pays you. And so for me, interest rates are really irrelevant, right? So if I can lever up a property, pull out as much cash as humanly possible, maintain debt coverage ratio after that. And even if the property doesn't cash flow me anything, I don't care what the interest rates are, right? It's just a cost of doing business. And the one thing is that as I've scaled, and this was a huge aha moment for me a few years ago when I started buying multi-million-dollar deals, is that the banks start looking less at the property and they start looking at you. And asset rich and cash poor doesn't work anymore, because it worked for me for a very long time. Yep. So I've had to have this sort of thing of raising capital from private investors to take deals down, refinance properties, pull cash out, stick it on my balance sheet, and really continually improving the liquidity position on that balance sheet so I can maintain my strength as a personal guarantor. So I guess what's next for you? Is it sort of block and tackle of just buying as many smaller multifamilies in the Park Avenue area, or what's on the road for you?
It's hard to tell. Mm-hmm. Park Ave has a lot of opportunity. I fell in love with it. I love the neighborhood. Mm-hmm. I'd love to stick close to my wheelhouse, but as I've started to grow and understand the business a little more and seen what's out there, seen how other people are doing things, seen larger deals being taken down, watched different buildings being sold, creative financing options, having the connections to do more, and having that comfort and that knowledge base, certainly open to stepping outside of my footprint a little bit. I would, for the right deal, if I was interested in the deal. Because I think that's what I love about Park Ave. I'm so interested in the history and the super boutique nature of the area. Mm-hmm. If I could find something like that, I would certainly venture out. I would take something else down. I've looked at industrial. I've been talking with a friend of mine about potentially buying some more industrial sized spaces. I know that that's a market to get into if you have the ability. Mm-hmm. It's kind of like the world is your oyster. I've restricted myself for so long to just sticking in my wheelhouse. That's where I was balanced. That's where I was comfortable. But I know that there's more. Mm-hmm. So maybe there's something that interests me more. Maybe there's something that interests me just as much. Mm-hmm. Maybe there's stuff I know or I will learn to stay away from. Mm-hmm. An expensive education.
Yeah,
that's one of the sayings. But I don't know. I think that the world changes so fast that if you had told me 3 years ago that interest rates were going to be where they were and I would have to shift my whole business model, I'd say, they're not going to go up that quick. Mm-hmm. Well, here we are.
Oh, yeah.
So I think that the market is going to dictate. It's what I need might dictate it. Mm-hmm. Well, maybe I have the opportunity to buy a large complex and I decide, I'm going to step away from the smaller stuff and buy into a bigger deal. Maybe that's the right fit. I chased after a few of those. There are a couple larger buildings in the area that I love, and I was willing to, for the first time in my career, think about selling something I've held forever. Mm-hmm. And that was interesting. Mm-hmm. And I think that as time rolls on and I grow within the community and the market, as my understanding goes, could be anything. Mm-hmm. So I don't think there's one thing. I think you're playing whack-a-mole with me. There's opportunity everywhere. Mm-hmm. There's nothing that's off the table if you have the right vision and the mental fortitude to go through something that's a challenge and going to pay dividends in the long run.
Mm-hmm. So speaking of the mental fortitude and all that stuff, one topic that I didn't want to forget to touch on was, this balance of you going through, I wouldn't call it balance, but balancing that you went through going through the scale dilemma with juggling a full-time W-2 and your family, and then this real estate empire you were building. I mean, how did you kind of keep it in a balancing act with, your, being able to keep a family together and all this sort of thing, and maybe there was some mistakes you made that going forward or looking back, you're like, yeah, I want to do that differently. Just tell me about that.
I would say with the juggling act, you try to only drop one ball a day. Mm-hmm. That was the reality. Mm-hmm. There were moments where I was torn away and there was unavoidable things that I could not get away from. There were things that I had responsibilities for, and whether that be for a kid, whether that be for my family, whether that be for the real estate, and whether that be for the job. And there were just those moments where I have to go. I have to be here. There's nothing else. With the real estate, I had a pretty good support network. I've had a lot of guys that I've worked with for long periods of time that if I called them and told them I am at an impasse here, I need help. Can you do X, Y, and Z for me? They would most likely do it. And they did do it for me as I was kind of meandering that balance. There were just obligations, and there was no getting away from it. I tried to always make work the priority because I always felt like if I couldn't do the real estate with the work, I could always sell the real estate. It's hard to find another job if you lose it. Not that it's impossible, but that was how my mind kind of worked. And that's the approach I took. So with the family, it's like, okay, I know that they need my time. So I would try and block time out. Did that work all the time? No. Were there moments that I was hated? Probably. And I believe that hate and love are very strong emotions and right tied together. So I knew that was a form of love and wanting me around. It's hard to be the provider that I wanted to be and also be as present as I wanted to be. And that's a scale that tips daily. There are always trade-offs. Something as simple as going out to dinner and being present, or just being home, watching television, sitting out in the yard, watching the dog run, doing all those little things that you kind of take for granted if you get to do them more often than I necessarily did. There were nights where I would get out of work, I would go home, I would be home until 7 o'clock, and then I got to go. And then I'm working on some project, whether that be a renovation or dealing with a tenant issue or doing bookkeeping or anything like that. I would do that from 7 till 2 in the morning, and then I'd go to sleep, get up, go to my W-2, and rinse and repeat. So drop one ball a day. That's all you can do.
No, I get it. That's I referenced the scale dilemma, which I actually had like a manifesto on this and why most real estate investors will never earn financial freedom. And it's because of that. And I think that you're one of the select few that were able to do that along with myself. And yes, I teach people on how to do it completely different than the way I did it, but it was just miraculous that I wound up on the other side because of this sort of, I would just have this rule of committing to something, even if I didn't know how I was going to do it or even having the capacity to do it, knowing that if I made a promise to myself, made a promise to somebody else, that I'd just figure it out. And it came at great expense to my own mental health, my own relationships I put under stress of the process, until I finally found that, okay, the cure to the scale dilemma is actually scale. But the problem with scale on doing it in 2 and 3 and 4 families at a time is that it's very difficult to bolt on a full scale rehab project on a 4 family. But if you have a 65,000 square foot high rise office building you're converting to residential, there's enough size to that. There's enough economies of scale to that to bring in the best of the best that all have their own core competencies. So then you can focus on what you're good at, and then also what you actually want to do, right? So, it's like walking away from my 1099 as a realtor, which I ended up, is like I started to become more and more like my dad, right? I remember this distinctly. Like every time we would go out for dinner with my dad for his birthday, he'd get a phone call and he'd just pick up the phone right at the dinner table. Hi, this is Mike Drouin. How can I help you? And I'm like, I would get so pissed, and that I was becoming that. But fast forward to when I was able to start focusing on the larger things, it's like I can have my phone outside the studio, and feel no stress associated with that happening. I'm not sure how you feel about that, but
I'm getting to that point.
Yeah. Well, that being said, I know we're going to be wrapping up soon, but Dave, our listeners are, those real estate investors out there that are trying to scale and do bigger things and, earn themselves their own time freedom and bigger financial goals and all that stuff. They may own a couple of rental properties and they want to scale. What is your words of advice to them in terms of like what they can do today, this week, this month to make it happen?
You just can't quit. There's a solution to every problem. You got to have your eye on the end game, and you got to have a dream and a path to get there. If you want it, you can do it. There's nobody other than yourself that's ever going to stop you. It might take some sacrifice. You might miss out on that trip to the Mexico, or a party with your friends, or staying out till 2 a.m. getting drunk and being too hungover the next day to function. You might have to miss some of that stuff. There is a bigger picture in my mind. The decisions I made when I was 23, when I kind of first got into this game, have paid me dividends. And I think will continue to do so. And in hindsight, I don't regret it. In the moment, it was frustrating, but in hindsight, it's been good to me. And I would encourage everybody to get started. Like, don't give up on your dream.
So there you have it, folks. Dave, if people want to get in touch with you, find out more about you, what's the best way to do so?
Oh, I don't know. Probably my cell phone. Do I give my cell phone out on the air? Probably. 585-764-5019. That is my personal cell phone. Text, call. I tend to try and ignore calls I don't know the number to. So text might be the better way. Just too many spammers out there at this point.
Yeah, so the unconventional call to action at the end of the show. I mean, we had Patrick Dutton on the show a few weeks back, and he's like, "What's the best way to get in touch with you?" He's like, "We're actually trying to fly below the radar, So if somebody so Matt, you can be the gatekeeper for an introduction. So no, this is awesome, man. So if you are watching or listening to this right now, and you want to get on the live exclusive content, I do a lot of educational long form content around how to raise capital, how to find off-market deals, how to do deal analysis. Most recently, I just did a training on how to on understanding commercial appraisals and the difference between commercial and residential. And me not knowing the difference between that cost me $107,000. Me having to write a $107,000 check to take out my hard money lender at closing, lest he foreclose on me. It was one of those things that I documented in there. So make sure to check it out on YouTube. Give a subscribe, hit the notification bell, and be on the lookout for our next training. That being said, thanks again for coming on the show, Dave. I appreciate it.
And thanks for having me.